Coming up on Your Money and Your Life, expert property advice on where to buy now for capital growth. The great motor mystery, why car insurance premiums are really going up. Do you know how much you spend on streaming services? Plus, in Kochie's Budget Challenge, Marina faces a decision with her health insurance. Hello and welcome to Your Money and Your Life, the show that's all about saving, spending, investing and enjoying your money. My mission is to make sure you're getting the very best deals on everything, from home loans to credit cards to insurance. Today we're kicking off with Kochie's Budget Challenge. Every week, with the help of the team at Compare the Market, we dive into real families' bills. Last week we met Marina and her daughter Kiara. We discovered hundreds of dollars they could pay less on their electricity and gas bills, and that was only the beginning.
I'm hoping to find some more savings in regards to my car insurance. I haven't touched it for a few years. The insurance is direct debited, so I don't actually see physical paperwork, which I find a real problem because I notice that my bank balance is quite low, but I'm not really understanding why. So it'll be good to see what I should be looking out for.
Now let's take a look at your car insurance and health insurance. And remember, these are just thought starters for you to follow through yourself. You've got to weigh up a lot of things for your own personal preference. Car insurance, 2013 Ford Focus.
Yes.
Currently paying $218 a month.
Yes.
$2,600 over a year.
I pretty much have stayed with the same company since I've had the car.
You have been hit with a massive loyalty tax, Marina. Let me tell you, year on year, your premium, it went up $745 in the last 12 months.
Oh, geez, okay.
Next time your insurance letter arrives, promise me you'll compare and go and check.
I promise.
Never automatically renew an insurance policy.
It automatically renews itself.
And they're counting on that. We were able to find a different policy, same access, roadside assistance as well.
Perfect.
That's less than half what you're paying now.
No.
Less than half. It is a change from agreed to market value. There is a driver limit on it as well. So your son, you've got to work out whether he can drive the car as well. But the monthly payment for this new policy is around $117 less per month than you're currently paying.
Wow.
That's a whopping difference over 12 months of $1,498 on your insurance premium. That's a big difference. Speaking of your son, let's take a look at health insurance now.
My son is type 1 diabetic, and so it was a bit of a shock when I received the letter from my health insurance to say that my son wouldn't be covered after the age of 21.
If he did go out on his own health insurance fund, his premium would be around that $145, $150 a month mark. That's a lot for a young kid, isn't it?
Yeah.
The cost could be reduced even further if he doesn't need things like dental surgery, plastic and reconstructive surgery, or non-PBS pharmaceuticals. We have found a policy that's around $40 per month more expensive than what you're currently paying, but would allow him to remain on your policy until age 23. So another 2 years.
Fantastic.
So a bit of give and take there, but that could be really important and really good for him. The hospital cover component is also Bronze Plus, which you're currently on, but it excludes a whole lot of things: podiatric surgery, insulin pumps, pain management with a device and sleep study. So you need to weigh up whether you need those as extras. So after looking through all of your bills, potentially a reduction more than $2,000 a year there for you, straight off the bat.
That would be a great help for the family.
And also, as a big thank you for having us here and being part of Kochie's Budget Challenge, Compare the Market, throwing in $1,000 in cash as well, just to help things out.
I so appreciate that. Thank you so much for all your help. I'm actually really, really inspired. I can't wait to show my husband and also to explain it to my 21-year-old. What really surprised me was the amount of money I was going to be saving just by taking a look at and comparing what insurances were out there for me. I'd love to have this discussion with my 9-year-old because I think it's really important that she hears the conversation about due diligence and saving money, so when she's ready to do it for her own bills, that she would behave in that same way.
After the break, protecting your superannuation returns when markets get shaky. Welcome back to Money in Your Life. Well, the way your super is invested can make a big difference to your retirement balance, especially over the long term. So how do you protect those savings when markets get shaky like now? Joining us today is Mark Ryder, Chief Investment Officer at Brighter Super. With a career spanning almost 40 years in the finance industry, this bloke has seen his fair share of ups and downs. So let's hear his expert take on how to safeguard your super in uncertain times and how choosing the right investment option can make all the difference. Mark, good to see you. Volatile markets can be really scary for superannuation members.
Volatility in superannuation is a fact of life, but I think what members have to remember is that volatility is up as well as down. If you look over the long run, markets provide positive, strong returns. And so the key thing to notice is that while all these cycles are different through time, but the one thing which actually holds true is that for those who actually hold firm and stay invested, what they can do is actually experience both sides of that volatility and get the positive, strong, long returns that they need.
As this chart shows, you know, it shows here the global financial crisis, the dot-com boom and bust. And you're right, there are, by the look of it, short periods when we're all worried and scared, but then the inevitable recovery follows after it. So you don't want to miss that recovery.
That's right. And at Brighter Super, we build diversified portfolios which are aimed at actually helping to navigate the inevitable volatility which you're going to have through markets and provide those strong returns which you need for your retirement nest egg.
What should be done when markets are volatile? A lot of people go, oh, I'm going to go to cash. It's the safest. I can't put up with this volatility. It'll keep going down. Is that a good strategy?
There's a huge difference between what cash returns and what the share market returns. I'd say the best thing is keep calm and stay invested. The worst thing to do is actually during periods of volatility is to actually go into a more conservative option and to actually miss the inevitable returns which will come as the market recovers.
So Mark, as the Chief Investment Officer, how do you design your funds for long-term growth?
That's the important thing to remember about superannuation, that it's a long-run investment. You know, you'll be investing money from when you have your first job and you've got a contribution to super up until you're into retirement. In terms of building the portfolio, it really comes down to using diversification, but probably the real key to actually building long-run returns of growth assets. Now, growth assets such as shares or property, they're more volatile, but what you do is get the stronger long-run returns that you actually need to build that retirement balance that you need to have a good retirement on. And another important point is that your earnings are reinvested, so your balance compounds through time.
Superannuation funds offer different investment options to their members. How should you manage that as a member?
At Brighter Super, My Super is our default option which you can invest in. But we also have a range of other options, from more conservative funds to funds which actually have more exposure to growth assets and provide higher returns but with somewhat greater volatility. And it's all based on your goals and the appropriate investment strategy. It always makes sense to get financial advice, and at Brighter Super we have a wide range of advice which we can provide to our members.
So get some good advice. That's right, you get the right mix for you. Mark, good to see you. Thanks for joining us.
Thanks, David.
Hi, I'm Grady Wolf from Belderact, and here's our stock of the week. WiseTech is one of Australia's tech success stories, the company behind CargoWise, the world's leading logistics software platform. It powers global supply chains for major freight forwarders and logistics operators. But what sets WiseTech apart is its relentless growth strategy. Over the past decade alone, it's acquired more than 50 companies, effectively consolidating much of the logistics tech space and obviously competition as well. And despite that rapid expansion, it's maintained customer retention rates over 99%. That's a pretty clear sign of product strength and execution. The recent acquisition of E2Open is yet another bold move, helping WiseTech enter adjacent markets and, of course, strengthen its competitive edge. With high-margin software, sticky customers and a strong track record, WiseTech continues to deliver on its global ambitions. And with these fundamentals, the stock offers pretty meaningful upside potential for long-term investors. WiseTech's share price may have been on a bit of a bumpy ride earlier this year, but with a smooth outlook for strong growth and margin expansion, it poses as an attractive buy rating in the current market environment.
Up next, where to buy for maximum growth. We reveal the next potential property hotspots around the country. Welcome back to Money in Your Life. Now, timing the property market perfectly is nearly impossible. But with interest rates dropping and activity stirring, feels like buyers could be in a bit of a sweet spot. According to a report from the Australian Property Investor magazine, nearly a third of investors intend to buy a home this year, with many selling in New South Wales to capitalise on the higher values and buying in more affordable Queensland and even Victoria. But which suburbs are going to outperform the others and deliver you the most capital growth? With her hotspot predictions from around the country, Nerida Conisbee, the chief economist of Ray White, has been polishing her crystal ball. Nerida, you've done the numbers. First of all, what are some of the options you're seeing in the housing market?
So the housing market, we're definitely seeing a lot of themes that are quite consistent across the country. It's a lot of outer suburban areas. So if you go to somewhere like Victoria, you're heading out to the Mornington Peninsula, Sydney, Central Coast. So the Entrance, for example, is an area that we have seen significant growth over a very short time period. And then heading to WA and to Perth, it's places like Mandurah that we are seeing, suburbs in Mandurah that are doing really, really well. So very, very consistent when we have a look across each capital city.
Okay, so there really are some good themes there, aren't they? Even for those over $1 million, which in some states it's, you know, a lot of most areas are over $1 million, there's still growth.
There is still growth, but they are getting quite expensive. So if you have a look at an area like Logan at the moment, prior to the pandemic, you could buy in Logan in Brisbane very, very cheaply, but now pricing is starting to kick over that $1 million mark. Apartments, though, they're still quite affordable, or townhouses.
I was going to ask about apartments because there's a big gap between, or bigger than traditional, between house growth and unit growth. Is that likely, units likely to catch up? And whereabouts?
Definitely we're seeing, in places we're not seeing much development taking place, we're definitely seeing apartment price growth outpacing house price growth. So to give you an example, places like Perth, Adelaide, Brisbane, we're quite unusually seeing apartment growth faster than what we're seeing for house price growth. So probably won't continue. The big challenge at the moment, it's very difficult to get apartment projects up and running because of construction costs. So as a result, prices do seem to be outperforming at this point.
Yeah. Now, for a lot of people, we just look at capital growth, don't we, with property, but there is that income side, the rental side, which for a lot of investors, getting that regular income stream coming in is really important. What are the areas where there could be good rental yield?
There's some really good rental yields still in Perth. So Perth has been seeing a very, very strong price growth. It's running at about 10% per annum, but we have also seen strong growth in rents. So the yields are still looking much more positive than what we're seeing in Sydney and Melbourne. Brisbane's quite similar, also Adelaide. Adelaide's been an incredibly strong market over the past 5 years. And it's not just prices, it's also rent. So as a result, yields are remaining pretty high.
What else is feeding in to property values? What should you be looking for in terms of choosing a property?
I think it's It's always a lot around what you would like to live in. So maybe not you as, where you are now if you're a bit older, but, when you were younger, an area that you would quite like to be in. But then also just looking at economic change that's happening. So a city like Adelaide, we have seen a lot of population growth happening there. The economy is doing really well. The Premier has been very good at attracting a lot of investment. And as a result, conditions have been super, super strong. Go up to southeast Queensland and there's huge movement up to that part of Australia. So that's also made quite a difference to house prices.
Access to transport or proximity to transport, is that still important? And, I've got adult kids with young children. Can't believe being in certain catchment areas for particular schools adds to property value as well.
Absolutely. When you have a look at places people want to be, they want them to be walkable. They like a really good local shopping centre. If you've got a family, being close to a really good school is important. Then we've also seen some really strong long-term trends around being near water. So if you have a look around Australia, the suburbs that have done really well over the past decade do tend to be near a beach or a river or some sort of waterway. So there's definite trends around suburb level, what people are looking for.
Marina, thanks for joining us.
Thanks for having me.
After the break on Your Money and Your Life, are you staying on top of your subscription and streaming services? That's next. Now to the great motor mystery. Why does the cost of car insurance keep going up when our car keeps depreciating in value? Can be hard to get your head around, but what isn't are skyrocketing premiums and mega profits from our insurance companies. It's time to blow the lid off car insurance. It's one of the safest ways to protect yourself from nasty surprises, but there's no denying car insurance is getting more costly. Aussies are paying 42% more now than 6 years ago, with the average annual comprehensive policy costing over $1,000. So what's really pushing up prices? Here's motoring expert James Ward from Drive.
There's a number of factors, but the number one thing is that the cost of repairing your car has simply become more expensive.
You can blame inflation. The cost of spare parts and labour has gone through the roof. But why are we paying more to insure an asset that drops in value each year? Over to James.
Unfortunately, the resale value of your car isn't the main factor. It is that cost of repair. And as those prices go up, your insurance premium is going to follow suit.
Your demographics and what you tell your insurer will also influence how much you pay. Things like where you live, whether you garage your car, and your driving record. Insurers risk rate these differently and charge us differently.
We consistently find that there are hundreds of dollars between the cheapest and most expensive quotes.
Here are 3 more fast ways to save. If you're a safe driver, consider increasing your excess. If you work from home more, check if a low kilometre policy suits you better. And think about paying your insurance annually. It can be cheaper than monthly.
It's really easy to run a comparison. You can do it in front of the television, and it only takes a few minutes to do.
To save on car insurance is twofold. Do shop around. But the other thing is to always read the fine print. You do not want to be caught underinsured.
Remember, you're not only doing yourself a favour by regularly switching providers, but all Australians. It keeps our insurers competitive.
Streamflation.
In this week's Word on the Street, streaming and subscription services. According to new data, Australia's most popular streamers have collectively raised prices more than 70% since 2023. So we asked the question, are you monitoring your spend?
I still thought it was like $17.
I thought it was $15.
Yeah.
Wow, I didn't realise it was so much.
I have no idea how much we pay.
We use Netflix, don't really monitor it, just watch it really, don't really care about the price.
I don't think they're providing anything extra for the extra money.
And can I just say, all the additional ads now, they've all got ads.
I think it's reasonable.
We're getting more movies that are made on these platforms, like exclusive. They got to increase the budget somehow.
I actually don't manage and monitor them. That's really bad. We have Disney Plus, Netflix and Paramount Plus. They take it out of my account every month.
So I've got young kids that want, say, Disney, and then I've got older children who want standard Netflix. So it's kind of a juggling, and sport, my husband. So it's kind of a juggling act.
My mum actually pays for it, so yeah, she's the one organising it. I just watch it, really.
That's it for today. I hope you've enjoyed this episode of Your Money and Your Life. For all the latest money and investment news you need to know, go to ymyl.com.au, and while you're there, subscribe to my free email newsletter, which is delivered to your inbox every Friday. Thanks for joining us. Next week on Your Money and Your Life, saving beyond Reserve Bank rate cuts, a call to action for owners, buyers and renters. How to fight the cost of surging power bills. What's your best money-saving hack? Plus, we help another Aussie household find big savings on their bills.